What's up, YouTube? Eric here, Mr. Fired Up Wealth. Happy St. Patrick's Day. Hope you got your green on. I've got an awesome video to share with you here today. 12 tech stocks that I think are buys now. And I'm going to break it down in different buckets. I've got a couple semiconductor picks, a couple cybersecurity picks, a digital ads pick, a couple e-commerce picks, a couple fintech plays, and 3 SaaS picks. You're going to want to see this one. Stay tuned. I started out singing, "Let's get it started." Ha! And I was gonna be like, "You guys like Black Eyed Peas?" And then I decided I wasn't gonna do it, and then I did it anyway. So my wife's laughing at me at the other room. I thought it'd be kind of funny. It's fun to keep it light, right? Let's get this party started with my top 12 tech stocks to buy now. Now, there's a lot of stocks that I think are a buy now. I'm trying to give you a variety here, so you might want to pick and choose the ones that are best. I'm giving you different categories. We're going to get it started with, I think, a stock that everybody likes, Nvidia. Now, it's not cheap. It trades at a 63 P ratio right here. It's technically a DGIF, dividend growth investing for fired, but it only pays a 0.07% dividend, so it's not, not a lot of dividend. There is one thing. So first I want to say that the stock has run a little bit, like a lot of these, they've popped off the bottom. It's held up that 209 range. I think support here is probably around 220, 222, somewhere in there. But the main reason I think the stock might go higher from here is there's a really important event next week, and I'm going to show you here in a second, so stay tuned. So next week, guys, Nvidia, March 21 to 24 is the GTC, and that's not good till canceled. It actually means GPU Technology Conference. And I think this could push the stock higher. Listen to this. So Greg Estes, Vice President of Developer Programs of Nvidia, told investors, in quotes, "There's a motherload of content that will be unveiled at GTC 2022, including news on accelerated computing, deep learning, data science, digital twins, networking, quantum computing, and computing in the data center, cloud, and edge. Sign me up. I like this stock. I've had it long for a long time. I think it's going to go higher from here, guys. Nvidia, the first pick on the list. These aren't in any order, but Nvidia is the first stock. The second stock, I don't have a fun song to kick it off, but AMD, I just did a video on this literally 2 days ago. I'm going to put a link above. Go check that video out. It goes deeper dive of why I think this is a buy. But a quick recap on that. The main driver here is Xilinx. That acquisition is finalized. A lot of the shorts actually closed their position. There was 42.5 million shares short that were closed. And I think this stock could go higher. It's actually down a little bit today. I think it has that range around 100 and 105 as the floor. If you can get it close to $100, if it goes under $100, even better. But check out that video that I just did on AMD. That's the second stock on the list. And those are the first 2 picks. Those are both semiconductors, of course. So let's move on next and go to cybersecurity. So my first cybersecurity pick, it's going to be a hyper growth stock. It doesn't have a P ratio. It's going to be more of your price to sales type of a stock. It's Zscaler, ticker ZS. Now, this thing actually has been hammered pretty hard, like a lot of these, from the high of $376 back in November of 2021. And the low was actually back in May, but the recent low, it did get under $200. You can kind of see on the chart here, it kind of broke down. I think it got to like 185, something like that. So it's slightly above 200. It's at 207. I like this thing 225 or less dollar cost average. Let me show you a couple things on Zscaler in case you aren't familiar with the company. So for Zscaler, I'm going to show you this slide here in a second. It's got some really impressive growth metrics, but I've got a definition here of Zscaler. I just want to read this really quick. I think it gives you a good high level understanding of what the business is all about. I think this is one of those stocks that a lot of people just don't understand what they do. So this is really in the cybersecurity realm, and it's really a cloud type cybersecurity business. So you think SaaS, software as a service, provides enterprises with the technology and expertise to guide them on their digital transformation journeys. Of course, that's a huge buzzword, digital transformation, very important. With cloud security services that replace the traditional inbound and outbound gateways, we help organizations transform their network and security infrastructure from an appliance-based model, old school model, to a modern cloud approach, which allows them to take advantage of cloud agility, intelligence, and scalability securely. And I do have a top 10 cloud stocks, and this was on like the top 5 list, and it goes deeper dive, maybe 15 minutes or so of Zscaler. So if you haven't seen that series, go check that out, the top 10. All those stocks, the series was called the top 10 cloud stocks to buy in the next dip. Well, we're in the next dip, and all those stocks are greatly on sale from when we did the video series, last year, I think last summer. So let me show you this chart here, this slide, some really good information on Zscaler. So I'm going to cover this up in the top corner, but it says growth in large enterprise customers in that top corner there. And I'm just going to slide my camera over here a little bit so I can give you more screen. So here's their financial Q2 2022 financial information. You can see revenue up 63%, billings up 59%, RPO up 90%. Here's a quote here from the CEO, Jay Chaudhry: driven by continued demand for our zero trust security platform. This is a big deal when you think of zero trust. We delivered strong results for the second quarter with year-over-year revenue growth reaching its highest level in 3 years. We even surpassed the $1 billion in annualized revenue. It's a big achievement. Customers are not only gaining security advantage from our zero trust model, they're also reaping the benefits of faster innovation and economics from our global cloud. So other key metrics down here in the bottom left, you can see platform adoption, you can see employees. I want to cover the top right, and my camera's kind of covered. I'm going to move my camera over here and make my camera a little bit bigger so you can see. So growth in large enterprise customers. So 251 customers that are greater than $1 million ARR, that's annual recurring revenue. That's 85% growth. 5,600 customers, 23% growth. Lots of great metrics here. Driving customer value at unparalleled scale, 26 million licensed seats, 7 billion security incidents prevented per day. This is huge. And I like a lot of these cybersecurity names, but I think Zscaler, especially if you can get it below $200, I think this one is a good long-term investment. Now, this next one, guys, is also in the cybersecurity realm, but a little bit different. It's TaaS, training as a service. And it's KnowBe4, KNBE. This was an IPO last year. It is a small cap, about $3.5 billion, and it's not very well known. So this is another price to sales type of a stock. It's kind of in that growth mode. And the stock has actually come down quite a bit. I always said, if you watch my video, I have a deep dive video on KnowBe4. You can check that out. It's part of the AI series. And I always said $20 or less was the target. And it got down actually lower than $20. It was in the 18s, I believe. The high on this thing was $36.67. Right now, it's still trading under $20. If you can dollar cost in under 20, I think it's a really good opportunity. Let me show you one quick slide that gives you a better idea of what KnowBe4 is all about. Completing the next paradigm, security awareness. I think this doesn't get enough attention, and there's a ton of total addressable market, or TAM. So what this does, guys, it offers you a solution, software as a service solution. It's really TaaS, training as a service, to teach your employees on what not to do. If the employees know what to look for and they're not clicking on those phishing emails, you don't have to worry about as many problems. You don't have to worry about, does my endpoint security system, is it going to protect me from that? Of course, an IT organization, an enterprise needs to have this entire solution of best of breed. You think of like the 4 horsemen, this could be that 5th horseman. So you've got your endpoint security, which is really important. We just talked about Zscaler for web, decentralized and distributed enterprise IT. You've got your identity, and a lot of these other companies are going more into identity. So maybe adtech isn't going to be the best of breed anymore. Who knows what the future is going to bring on that. But focusing today on KnowBe4, cloud-based security awareness platform teaches your employees on what not to do. And it's that first line of defense when you think of cyber attack. If your employees can help, the more they know, the more knowledge they have. Every single month, every quarter, however you want to set it up, your employees have to go through training and they're quizzed on what to look for. And so it's security awareness to basically help prevent the attacks from happening in the first place, especially when you think of phishing attacks and things like that. So up next is Digital Turbine. Now, we've done some deep dives. Me and Tony C, we did a video as well talking about apps, Digital Turbine. This is another small cap, about $3.7 billion. It has kind of bounced nicely off of its lows, but anything $35 or less, even probably $40 or less, if you can dollar cost average, it was a $93 stock, doesn't mean it's going to go there overnight. 83P ratio. Let's look at one quick thing here. If you want more, if you want a deep dive on apps, check out the channel. I'll put some links above. I've got a 30-minute video and another 20-minute video. I've got almost an hour of content deep dive. When you think of especially the Android ecosystem, these guys are a really big deal. And I think there's a lot of good things coming with some recent acquisitions they've done. Check out those other videos. One last thing I want to show you really quick, just to give you some insight on what Digital Turbine's all about. So this is probably my favorite slide out of the deck. Diverse products drive revenue at activation point and beyond. So you've got the first day revenues when you think of the install. They basically have pre-installed apps that come on these devices like Android devices, phones, etc. But then you also have these recurring lifetime revenues. They've created an entire flywheel or an ecosystem by basically adding these Ad Colony, Appreciate, Fiber. They've made some acquisitions that really helps them with the programmatic ad space, as well as brand advertising, content discovery, the publisher monetization. They really do have a great ecosystem, especially when you think of, like I said, the Android type devices. So if you want more information on this one, check out the channel. We got some deep dives, but Digital Turbine is the next one on the list. That's your 5th stock on the list of 12. So let's get into a couple e-commerce picks. The first one, Shopify. It's a large cap, $78 billion. You can see this thing's been absolutely hammered. It was $1,762.92, and it came all the way down to $510 on March 14th. Of course, in hindsight, $510 looks really attractive, but I'm looking at this stock at $631, and I still think it's a buy at these levels. Of course, it could have volatility. Maybe it retests. Maybe it goes below 500 or 600. I mean, if it goes below $600, I definitely think it's an easy add for me. Anyways, my opinion. I'm not a financial advisor, but I believe if you can get this stock even $650 or less as a long-term investment. It used to have a floor closer to 1,000, but that floor was completely thrown out when we had this recent bear market on the QQQ on the NASDAQ. So let me show you a couple things from their investor deck on Shopify in case you aren't familiar with the business. Now, the nice thing about Shopify is it's an e-commerce play, but it also is a SaaS play. And if you don't understand the business, basically, here's how it works. A company or individual who wants to sell products online, they sign up for one of their subscription tiers. So it's a subscription as a service type tier. This gives the seller access to a custom URL, an easy-to-use e-commerce website builder, and an app marketplace with hundreds of different add-ons to enhance the site. Now, on top of these subscription solutions, it offers brands the ability to have customers check out from other websites with Shopify payments. Shopify makes money when customers choose the option at checkout, taking between 2 and 3% on every transaction, similar to like a credit card. So they have their software as a service solution, their subscription model, but they also have that monetization on the actual fintech side of it, 2 to 3% every transaction. So one platform, every channel, any device you can see on your screen here, making e-commerce creative and the important easy. Single integrated back office, so you can see everything, payments, capital, you've got marketing, analytics, apps, inventory, fulfillment, order management, shipping. It's a one-stop shop, not only for entrepreneurs, basic is $29 a month. You also have SMBs, or small and medium businesses, anywhere from $79 for the Shopify, or advanced $299 a month. And then for the larger brands, they have Shopify Plus, that's $2,000 per month. And there's a lot of TAM. So entrepreneur TAM, they're showing $160 billion of TAM. And there's just a ton of information on this. And this is this video has 12 picks, so I can't spend a ton of time on here. Check these guys out in more detail if you don't know them. They're based in Canada. I think it's a great company. I think it's a great opportunity if you don't already own the stock to get into it. If you look at the market position, Amazon right now has 41% share of US retail e-commerce sales in 2021. Shopify has 10.3%, and you can see the others down here. So they're quite a bit smaller than Amazon, but if you look at go back here again and look at the large cap or the market cap, it's a large cap of 78 billion, and Amazon is something like a $1.5 trillion company. So Shopify is the next pick. Again, these aren't any specific order, but Shopify e-commerce pick, it's your 6th pick out of 12. So a great segue. Next pick is going to be Amazon. Now, I recently did a video on Amazon. They announced a 20-for-1 split that's happening closer to summertime, I think June. Also a $10 billion stock repurchase plan. Now, according to Fidelity, they're trading at a 47 PE ratio. It's one of the cheapest, premiums that you've really seen on the stock. It's a $1.5 trillion, of course, mega cap. And these guys have their hands in everything from, you think of AWS, Amazon Web Services, you think of the digital ads they're getting into. Their digital ad business is actually larger than YouTube's on a revenue scale, if you can believe that. You look at their merchant resellers, you look at they have the subscription model as well with Amazon Prime. I mean, these guys have their hands in everything. They might even be getting Sunday Ticket. Who knows how that's going to play out. But I like this company a lot. And I don't like it necessarily just because of the retail side of it. I like it for things like, cloud services. I like it for the digital advertising. There's just a lot of room for Amazon to grow over time. And every time this stock gets down to 3 price to sales, it bounces. And it goes in these modes where it basically has a growth mode where they spend a bunch of money, and they just did that, building out a bunch of facilities. And now they go in, what we call harvest mode. So now they're going to harvest, and you're going to see acceleration in revenue and profitability over the next several years. Now they do have supply chain issues to worry about and things like that. But Amazon, I think, will weather that storm. I think if you look 12 months out, I think this is at least a $4,000 stock. And this is the next pick on the list to round out our e-commerce stock picks. So let's get into some fintech. Now, this does show a 374 P ratio on Fidelity, so it's not cheap by any means. Large cap stock, $67 billion. It has bounced nicely. It actually, in February of 2022 here, it got down to $82.72, and it's already back to $122.52 today. But you will see that the high was $289. I'm not suggesting it's going to go to an all-time high anytime soon. And they recently changed their name from Square to Block. So let me show you a couple things about this company in case you're not familiar with what they're all about. I think this is a great long-term hold, especially a fintech play. This is what I'd call, and in the fintech space, fairly safe, because I think that this company is not going to go anywhere, right? It's not like it's a startup company that's going to go out of business. It's expensive, but I think if you look at what they're trying to do, not only in the fintech space, they also just bought acquired Afterpay, so the buy now, pay later space. Of course, in blockchain, you think of cryptocurrency and blockchain, they're doing some great things. And I think this is kind of one of those pick and shovel type plays. If you aren't someone that invests in cryptocurrency and you want some exposure, this is one of those stocks that can give you some of that exposure. So you can see their new branding is kind of interesting. Block, this is their shareholder letter recently here. So investors.block.xyz. So highlights, I mean, if you look at it, the fourth quarter, they had a pretty solid quarter, which is why the stock started to rebound. They generated gross profit of $1.18 billion. That's up 47% year over year. The Cash App, this is a big part of their future business as well as their current business, but it's going to be a big part of their future. If you think of like payday loans, payday loans could be replaced, could be completely disrupted by something like Cash App. And that generated gross profit of $518 million. That's up 37% year over year. The Square ecosystem generated gross profit of $657 million, up 54% year over year. Now, remember, this is one of those work from home kind of pandemic plays. And so the market just really wants to punish these and kind of bring them back to pre-pandemic levels. If you look at this stock has actually held up pretty well compared to some of them. In fact, the next stock pick we look at has not held up nearly as well through the pandemic, and it's also a fintech play. Their cash card has also reached significant scale. So it says here, there were more than 13 million cash card monthly actives in December. That's 30% of 44 million. Our sellers have adopted more of Square's ecosystem over time. So you think of net-based retention sort of a thing. It's not a SaaS play, but when you actually, have good products that your customers are happy with, and you roll out new products and they expand into new products, expand that footprint, that's really good to see. You look at the metrics, gross profit, we talked about $1.18 billion, adjusted EBITDA, $184 million. These guys have a lot of good things going for them. And in the fintech space, I think Square is a good long-term hold. It's one that's going to give you decent returns over the next, 5 and 10 years. So staying within the fintech theme, PayPal, I think that PayPal, when it got below $100, it got to $92 on March 8th. It got to $92.25. I did buy some of this below 100. I didn't hit the bottom perfectly, but it's already at 109. It was a $310 stock. And if you look at this one, guys, if you look at a two-year chart on PayPal, this one actually came all the way back basically to the pre-pandemic lows. So if I look at a 5-year chart on this and kind of zoom it out, this is the pandemic lows. It basically retested those lows, came all the way back. So erased, essentially 2 years of profitability, of gains, of market share. It trades at a 30 P ratio, 30.66. So it's not crazy expensive here. It's pretty high quality, large cap, $125 billion market cap. They have, listen to this, 200 plus markets and 400 million active users. PayPal is the next pick. I think this one's going to go higher. I don't think it ever should have gotten below $100, and I think it's a good long-term investment. So next I'm going to cover 3 SaaS plays, and I'm going to give you a blend of higher quality and then smaller cap. So we're going to start with Salesforce CRM, very large cap, $203.5 billion market cap. It is a 137P ratio. The good news, it's profitable. The bad news, it's still expensive. But for the growth, I think you can justify it, especially if you can get this thing below $200. It did get on February 24th, it got down to $184.44. Let me show you a couple slides on Salesforce. Okay, so I'm sure you're aware that Salesforce CRM acquired Slack. And that's been finalized for a little while, but they paid a lot for it. And that's part of the reason why the stock was really hammered. People just didn't think it was a great buy. Now, if you look at the management, Mark Benioff, CEO, he's a former Oracle guy. I used to work for Oracle as well. I've followed this stock for a long time. I've owned it for a while. And management's really proven to us time and time again that they make these acquisitions. You think of like MuleSoft and Tableau, and they do pay a lot for those acquisitions, but they've made them work every time. So I have no reason to doubt the management. Now, if you look at this new product innovation in all clouds, so they're really trying to create this flywheel, and it has everything from, you can see on your screen, but marketing, commerce, service. So it used to be just customer relationship focus, and now it's becoming much more than that. And a couple of key drivers here for growth, I think, guys, these are 2 new products in the bottom left, and I haven't seen them talked about enough. They've got the Sustainability Cloud 2.0, and they've got the Health Cloud 2.0. And I think that could be a big deal. Now, when you think of like Veeva Systems, they're really in that life sciences. I don't necessarily think they're competing in that space, at least not yet, because they're not making software for it. But it is really interesting because when you think of cloud SaaS and you think of life sciences and health, the first name that comes to me is Veeva Systems. And to see them kind of expand into that area a little bit more is interesting. I think there's a lot of opportunity there to compete with companies like Veeva Systems. So it'll be interesting to see how that unfolds. But I'm very, very bullish on this company, especially because of their management team. I have a lot of conviction and faith in the management team. This is one of my top holdings. Like I said, I've owned it for a while. And I think if you can get it, close to 200, especially under $200, I think this will be a good long-term investment. It's been, trading really sideways to lower, stuck in the mud for a while. But I think eventually it's going to have that breakout, and you might see it even in the next 12 months. So this is one of my favorite small cap stocks. Fidelity calls it a micro cap, $1.98 billion market cap, and it's Olo Inc. Now this is really SaaS for restaurants, and I'll show you a couple slides here in a second. But this stock has absolutely just been crucified. It's dead. It's been buried. Trading at $12.83. The low is $11.47 just on March 14th. It was a $49 stock. And the growth isn't hyper growth, and it is fairly expensive. But when you look at the multiples for SaaS and you look at really the moat that these guys have, I think it's a tremendous opportunity. I was really surprised to see the stock go below $15. But a lot of these growth names have been just absolutely just murdered. And the thing about it is it's a small cap, and there's just not a lot of people that know about it. And it was a new IPO in 2021. So all those things kind of are against Olo. And I think it's an opportunity here, $12, $13 or less. If you can get it really anything under 15 in dollar cost average, I think my cost basis is over $20, and I'm still, highly confident in the stock. I have a video called The New 10. It's my favorite top 10 innovators for the next decade. And Olo's in there. And I think that it's really important because there's really not a whole lot of competition doing what they're doing. Let me show you a couple slides to get you up to speed on what Olo is all about. So it's not that they don't have any competition at all, but these guys really have a moat, and they're building it out more and more. They've made some really key acquisitions. They're doing some really cool stuff. Leading open SaaS platform for restaurants. So this is really key, and this is what I want to show you. They have 500 plus brands, over 79,000 restaurants, 200 partners. 2 million orders per day, 2 million orders per day. The best way to put this, they've got those exclusive relationships. If I'm a restaurant owner, I can go ahead and create my own app, but it's not going to be scalable and not just connect automatically to all those delivery services. So this Rails, you think of Olo Rails, it's a plug and play type solution that just makes it really easy for business owners. It enables every type of restaurant order. So 45 billion off premise as well as 12 billion on premise. They're doing a lot of cool things. Only 15% of restaurant orders are digital. So think of the TAM that's in front of Olo. I like Noah Glass a lot, the CEO, and I think this stock's going to go much higher with time, but it could take some time. People haven't really caught on to it, and it doesn't really have the growth metrics for the valuation that it was at, but I think where it is now, closer to $12, I think that's priced right. And I think it's one that if you got into it here, dollar cost average, held it for a few years, I think you'd be really happy with Olo. Before I give you my 12th and final pick today, please subscribe to the channel if you haven't already. Now there's a bell you need to click to get notifications. That's going to give you a notification every time I drop a new video. I've been testing different days and times, and I think a lot of these videos are getting missed. I've been doing a daily video for the last several days, and the results have been kind of mixed. So subscribe, click that bell to get notifications. Every time I send out a new video, you'll get notified. If you want to help me out for doing these videos, guys, drop me a like and drop me a comment. So without further ado, the 12th pick, this is going to be in the SaaS bucket, is going to be Adobe. Now this is a higher quality type company. It's a 44 PE ratio, $200 billion market cap. So very similar when you think of like Salesforce metrics. These guys, Creative Cloud, I used Creative Cloud for quite a while to do my content creation. I decided for me personally, it was just too expensive to maintain. I was paying something like $100 a month all in. But when you think of Creative Cloud, essentially, it has a lot of different stuff in it. I mean, everything from you think of Photoshop to video editing and creation to everything in between. It's amazing actually when I signed up for it, just how many different apps there were and different solutions. And I just didn't use the majority of them. So I ended up canceling the subscription. I do have a subscription individually to a couple of the services, the ones I use the most. So I'm still a subscriber of Adobe. I just don't have the entire Creative Cloud solution. But I really think it makes sense, and I'll probably go back to it once the channel grows a little bit more. But Adobe is the 12th stock on the list. Again, these aren't in any order. Hope this helps. It gives you a little variety and gives you different segments to look at, different market caps. You've got a little bit of the SaaS, you've got some, e-commerce, you got Fintech, you got semiconductors. There's a lot of other stocks I like, but here's 12 ideas for you to go explore. I appreciate your time and attention. I hope you enjoyed this video. Have a great rest of your day. Take care.